Dan Niles, Niles Investment Management founder and portfolio manager, is with us this morning. What say you about Apple, a company that was counted out on the AI front? Then people gave it credit. Then people said maybe it's not working, and now maybe it's working again. What's really happening here?
In this video, Dan Niles analyzes Apple's recent financial performance, noting a modest revenue increase of only 3% over the past year and 5% over the last 3 years, with disappointing iPhone sales contrasting with the robust growth of its service segment. He questions Apple's high trading multiple relative to the S&P 500 amidst slow growth, especially in the competitive Chinese market. Dan points to the potential benefits of AI advancements, such as DeepSeek, which could reduce hardware costs and enhance Apple's AI efforts, although these improvements may take time to permeate the ecosystem.
And what they're offering, people aren't really all that excited about. And that's why you've got these really slow-growing top line. And the question is, can they get out of that? And to some degree, DeepSeek, which came out, which means that, hey, costs are dropping a lot on the hardware side. Maybe that ends up helping Apple, where they can free ride on some innovations that others have done, like ChatGPT in the US or DeepSeek in China. But for right now, that's the situation you're in. A low growth stock with a high multiple. There's a lot of other names you could go to that are growing faster. You can pick Google, Meta, for example, Microsoft even, where they're growing much faster, but they have a lower multiple.
We keep asking the DeepSeek question to just about anybody who's involved in this side of the world. You live in this world. Is there a larger implication for an Apple in terms of CapEx? If you believe that they did it more efficiently, or maybe you believe they stole it, or maybe you think it's a combination of all of the above?
Well, I think you have to remember, I was on CNBC last Friday before this whole thing broke, and I put out a post saying, look, DeepSeek's going to help hardware costs go down dramatically, and it'll help the AI agent sitting on top of it. And obviously, what Apple's counting on is Apple Intelligence, which is an AI agent, helping to drive upgrades, hopefully later this year. I honestly think it'll be more like next year, because it's going to take a while for this technology to go through the ecosystem in the US. So is it going to help Apple? Absolutely. But remember, they weren't spending much money on this anyway, which is why they were so far behind in the first place. Where it's going to have more impact is the other Magnificent Seven companies that have already been investing aggressively in AI, where they might be able to spend less by the time you get to the end of this year as they work through some of those innovations into their own models.
But Dan, that's a big question. Should we look at what happened with DeepSeek and say, okay, you too can create a great model, an open source model that's free effectively, without nearly the same kind of chip configuration and CapEx spending? Or do you say, by the way, like I think a lot of the folks inside OpenAI and others might say, yeah, you can do that if you just rip us off and steal everything we're doing. Sure, you can do that, but that won't really work long term.
Well, you got to remember, OpenAI is building off of the work that Google did on transformers and large language models. And this is open source. So everybody's building on everyone else. And by the way, all of the innovations, remember, DeepSeek's open source. So all the innovations they have there, Facebook, you're going to see it in the Llama models, which, by the way, before DeepSeek came out, was the best open source model out there. And so you're going to see this permeate. And if you think back to the internet as an example, in the early stages of that, it was all the hardware companies that did great. So you think of names like Cisco or Ciena, et cetera. And then what happens is the hardware layer gets commoditized. Cisco and Ciena are nowhere near where they were in 2000. And where does the value accrete to? It accretes to the guys that are providing services to you and me, like we all use Amazon, right? And they benefited from all that lower broadband cost, dark fiber costs during that period of time. And so what I think you're seeing is you're going to move from hardware being the big area where you're spending money to you're going to move to the platforms. And ultimately, I think you will have AI agents on our smartphones or our PCs that people really want to use. And then hopefully Apple's not growing 5% over 3 years at that point. And so that's, I think, the way you need to think about this going forward. This isn't a bad thing for AI. It's just where's the revenue growth going to move to? And I think it's going to move from hardware to more of the software level and those sitting closest to the consumer.